we will have mined 99% of the Bitcoin by 2035. What should happen is the people that were buying the houses as a store of value should sell that real estate, buy Bitcoin with it. The price of the houses will become more affordable. And then, 20-something starting their career can buy a house instead of living with their parents. The world is rationalizing when people don't irrationally buy assets in order to avoid losing their money. Bitcoin's secure because it has this massive, diversified, decentralized network of Bitcoin security data centers, which we call miners, but they're really driving up massive hash rate to secure the network. They are subsidized by a Bitcoin block reward, and they're also subsidized by transaction fees. The block rewards, for the most part, run out after the first 30 years of the network. Between 2009 and 2035, we will have mined 99% of the Bitcoin by 2035. So that's running down, but the transaction fees will grow and are growing over that period because there's a scarce amount of block space. You can maybe process 30,000 transactions an hour. And if you want to move your money or you want to do that transaction, that's a limit. You have to put a bid to get your transaction in the next block. People are going to bid high. If I want to move $1 billion, I'll bid a lot of money. If I need the transaction to take place, I'll bid it up. The more people in the network, the more demand for that transaction bandwidth. What would you pay to sell $10 million worth of real estate in New York City today? What? You might pay $1 million. You might pay $1 million in transaction fees. The transaction fee economy works just fine for real estate, right? There's no block reward for real estate. People don't just get a bunch of free real estate every 10 minutes for being in the real estate business. They all work on the basis of a commission. The same is true in the financial markets. So there'll be commissions and fees to trade. There's a very limited amount of transaction space. The fee will go from a few dollars a transaction to $30 a transaction to $300 a transaction to $3,000 to $30,000 to $300,000. And that being the case, there's no reason to think the mining ever stops. It will be more efficient. In a world right now, I guess you have $1 trillion asset class and the Bitcoin miners get paid $10 billion a year. So the cost for the security, right? $10 billion a year is like 1%, right? The fees will trend to be less than that. And so that 1% security cost will probably become 0.5%, 1/3%, 1/4%, 0.1%. But there's no reason why the revenues can't go up while the value that's protected goes up. And the incentive is always going to be to run the equipment. Even if the transaction fees aren't high, once you've invested $100 million in Bitcoin mining equipment, it's a sunk cost. You can't repurpose it to anything else. If your electricity is free, and if you have $100 million of equipment, then it doesn't matter whether you make $1 million a year, $10 million a year, or $100 million a year. You would run it for $1 million a year. You would run it at a 99% lower price because $1 million a year is still better than nothing a year. The electricity is worth nothing to you. 1/3 of all the electricity in the world is valueless. It's wasted, stranded. We've got too much. It's like you have a dam. Nobody wants to buy electricity from the dam. The water just flows over the dam. Right? Or you can mine Bitcoin. So the genius of the network is everybody that gets into Bitcoin mining does a one-way trade. You take $1 billion, you invest it in Bitcoin mining, you can't get your money out. You can go bankrupt. The equity holder can go bankrupt, then the creditor gets the Bitcoin mining. The debt holder can go bankrupt. Then the electricity company, the power company gets the mine. The power company can go bankrupt. The nation state, the sovereign that owns the power company will own it. If you notice, electricity companies never go bankrupt. Maybe they're owned by the state or they're owned by the country, but people decide they want electricity and they'll keep running them. There's no way to turn them off And that's why even in a crypto winter or bear market, the hash rate just keeps going up. It's a one-way silicon ratchet. And it's like at an 8 to 10 year natural frequency. It's like 8 years after the business became awful, my equipment starts burning out. But you see, even if the equipment burns out, like people they would buy Bitcoin mining rigs for $10,000 at the height of the bull market, and then the market price crashed, and then they're buying the same rig for $1,500. So the price of the equipment will compress by 90%. The price of electricity will go to zero. How does it go to zero? Everybody that's just mining on expensive electricity goes out of business. So when they go out of business, where does their equipment go? It migrates to the next buyer. Who's the buyer of last resort? Someone that has free power. There are actually places where there's where the power is negative cost, where people will pay you to take the electricity. You know, that happens on solar and wind grids, where the sun is shining, the wind is blowing, and we're going to burn out the grid unless you take the power.
Wow.
Right? You see?
Yeah.
You know, and it happens if I'm flaring methane gas or if I'm flaring natural gas. The regulator says to you, if you don't actually use this, if you don't cap the flare and use this, then you have to write off and close in the well. And then you take $100 million write-off. There's always going to be people that are going to want to mine Bitcoin, and there will always be a market for Bitcoin equipment that's used. And you want to be a doomsdayer? Well, okay, 10 years later, all the Bitcoin mining rigs all burn out. What happens? Well, what happens is the big semiconductor manufacturers like Bitmain already have the engineering specs. They will sell this equipment at a variable margin of 3%, right? You know, what does it cost for a 386 chip, or what does it cost for a 30-year-old computer, right? At some point, you manufacture it for 5% of the original cost. It gets insanely cheap. Like they put computer chips in greeting cards now, right? And so you're working your way down this manufacturing curve and this Moore's law. It's just like, the truth is guns are cheap. They're too cheap, right? You could buy a gun for $100, right? That works. What you have here is a network defended by technology, and the technology is a one-way function, and the hardware is one-way investment. You can't unknow how to set off an explosive. You can't unknow how to build an ASIC. But now that you know how to manufacture it, and now that you own it, what can you do with it? There's only one thing you can do with it. The only thing you can do with it is provide security for Bitcoin. So it's a quite elegant engineering design that I entice so many engineers to invest so much money to simply defend my economic rights against those who would steal from me.
Do you think that the government would just forego control of the economy? I feel like I wouldn't think that the United States would do that if Bitcoin got to the point of being used as a currency and being traded and kind of, it's not traceable, it can't be controlled.
Yeah, it's
the government has only ever increased their control over time.
So I think the important point there is it's not a currency. Like a currency, properly defined, would be a medium of exchange that is deemed legal tender by the nation state. So if I give you $15, for 3 cups of coffee, it's tax free. It's a tax-free exchange. If I give you $15 of Bitcoin for that coffee, and if I bought the Bitcoin a year ago for $5, I just generated a $10 capital gain, and I owe $3 to the government in tax. So in fact, for me to pay you in Bitcoin cost me $18, not $15. And I generate 87 million accounting transactions, which will break your brain. So as a practical matter, currencies are established by nation states. And when a nation state deems the asset to be legal tender, they give a corporation or an individual the right to trade it tax-free. And that's a pretty big advantage. That's a big enough advantage that no company in the United States will ever, like no company will ever trade Bitcoin high speed to pay things or to pay bills, because with normal volatility, you can show mathematically that everything costs 20% more if you trade it and it's not legal tender, you see. So nobody's stupid, right? It's just, why would you pay 20% more for everything you buy and accept 20% less for everything you sell, right? So it's not a currency. And if you think of it as a currency, you invite all sorts of concerns and risks, like it doesn't fit with the accounting systems. The only way to trade it as a currency is not pay your taxes and not admit it, but then now you're a tax evader, right? So that takes you to a difficult place. If you just say it's capital, right? Money, medium exchange, store of value. Well, the store of value element of money is capital preservation. I'm keeping it's my savings account I'm going to hold for 30 years. Currency, checking account, I'm going to spend in this month, right? So if you think about it as capital, or as property, I bought a building. Did you intend to use it to buy coffee tomorrow with? No. You bought a building. Why'd you buy it? Because you wanted to store your capital. You thought it would double in value in 10 years. That's why you bought the building. It's an investment. So when you think of it as property or think of it as capital, then all of those concerns disappear. Now, if you look out at the future, companies, as long as they exist, will issue equity. If Apple and Facebook and Google exist, they're going to issue equity. Equity will not go away. Is it an investment? At a certain price, if you can buy the stock and it has a 22% dividend yield, it's a good investment. If it's too high, it's a bad investment. So there's a natural market clearing price where equity is an investment asset. How about property? People buy real estate, Airbnbs, buildings as an investment. Is it a good investment? If it has a 15% or 10% rent yield and is going up 10% a year in value and it's a good, desirable place, then it's a good investment. If the rent pays 2%, after tax and it's in a crappy place and it's not going to value, it's a bad investment. So real estate is a good or bad investment. So property will stay here. The city of New York, city of London or whatever, they will issue bonds. As long as there are municipalities and states and they can issue bonds and they can borrow money, or countries, they will issue bonds. Will you see sovereign debt, municipal debt, state debt? Sure you will. Is it a good investment? Not normally, but credit's not normally a good investment. If it paid 10, 15% interest, and if the currency wasn't collapsing, then it might be. But if it pays 10% interest and the currency is collapsing at 20% a year, it's not a good investment. But will they do it? Yeah. And who will buy it? The governments will buy it from themselves. Central banks will buy their own bonds. Institutional investors, regulated banks, regulated corporations, the state power company, they will buy municipal bonds because they're required to by their charter. And so that will circulate. Countries, the United States will issue the dollar. China will issue the CNY. The euro will issue the euro. How long will that go on? Until the nation states collapse. Where does it collapse? Well, half the countries in Africa don't have a currency. They use the CFA, the colonial franc, right? They literally don't have a functioning currency of their own, and El Salvador doesn't have a currency. So those countries will either dollarize, or they will use the CNY, or they'll use the EU, the euro, or they'll use the CFA. And so where does Bitcoin sit in all of this? It's an asset in a portfolio. It's it's global property. Everybody else doesn't have to fail for Bitcoin to succeed. Right? When we're preaching Bitcoin going to 100 trillion or 200 trillion, that doesn't mean you might not own a building. Is my beachfront property in Palm Beach a bad investment? Well, not necessarily. But there are certain assets that are quote unquote monetized. That is, people buy the asset just as a store of value over and above the utility value. Gold is an example. People that are buying gold as a store of value probably are, 70, 80% of the value of gold is monetary value, and the last part is utility value. One could think that over time, Bitcoin will demonetize gold. There's a scandal in Canada where people, the Chinese were coming. The narrative was the Chinese are coming into Canada, buying up all of our apartments and all of our houses and driving the price of housing up. Well, I mean, maybe also the Canadian government was printing a lot of money, driving up the price of housing too. And maybe corporations were buying up property because that was the best way for them to invest their shareholder capital because they had a lot of money. The problem with that is that the houses, tripled in value, but the wages of the people that want to live in the houses don't triple. And so if you triple the price of the house and if you double the interest rate, then the middle class, working class person can't buy a house. That's an example of monetizing a useful asset to the detriment of the society. What should happen is the people that were buying the houses as a store of value should sell that real estate, buy Bitcoin with it. The price of the houses will become more affordable. And then, 20-something starting their career can buy a house instead of living with their parents. The world is rationalizing when people don't irrationally buy assets in order to avoid losing their money, right? In the extreme, if I tell you all your money is worthless next Monday, you stampede to buy anything you can buy, and you monetize soap and you monetize toilet paper and you monetize, you see where I'm going with this? Yeah. It's like when I panic you monetize anything because you don't want to be holding worthless paper.